Hey, what is going on YouTube? If you're watching this video in September or October, then you're just in time because we're about to go bargain hunting. If we think back to the last 6 months or so, there was one sector in particular that got especially hard hit, and that is the travel and leisure sector thanks to a little something called the Delta variant. But within recent weeks, we've seen the reflation trade pick back up, so cyclicals starting to come back at the expense of your tech stocks. We've seen a large migration towards the reopening plays, in particular the airlines and the cruise lines, as infections, hospitalizations, and deaths all start to turn a corner. If you've watched some of my previous videos, you know I predicted this. We looked at India, we looked at other developed countries, and we noticed that within 2 to 3 months or so, these infections naturally tend to peter out, regardless of whether people have access to the best vaccines or more mediocre ones. And we've seen some encouraging signs elsewhere. We've seen Delta being able to outcompete potentially other variants of interest, including the Mu variant, which had some elements of vaccine elusivity. And we've also seen remarks by Dr. Anthony Fauci, as well as the former commissioner under the Trump administration, say that Delta is probably the last major wave of COVID before this pandemic shifts from more of a pandemic to an endemic phase. So all of these things should be very powerful tailwinds for the next 6 months or so for a large pickup within certain cyclical areas. So within that backdrop, I'm going to be taking a look at some of the most popular travel and leisure stocks, focusing on the airlines and the cruise lines, and I'll be sharing my actual positions and my actual picks across these companies. If you're new to the channel, welcome. I go by Tenbagger. I'm a self-made millionaire investor, and I want to help you discover the best single names to invest and beat the market with. All right, guys, so without further ado, let's get right into it. The first one, American Airlines, is trading at about $21.50 as of filming this video on September 28th. There are some pros to this name. They've got the newest fleet and the lowest forward CapEx requirements out of the big three legacy airlines, which translates to better fuel economy as oil lurches towards, oh my gosh, $80 per barrel. It is also operationally one of the strongest, with management guiding it only being down 20% in revenue and capacity relative to Q3 2019 levels. That's significantly better than, say, Delta with 30 to 35% reductions and United with between 25 and 30%. So that's something to keep in mind. However, there are some pretty big downsides with this name. The first is valuation. They're already worth a decent amount, like 10% more today than they were at pre-pandemic levels. Granted, you could argue that it was on a slide in 2019 thanks to the state of its balance sheet and debt-fueled share buybacks, but it's hard to argue that it's in a 10% better spot now than before. The stock is already pricing in some pretty lofty expectations, especially relative to the other carriers. The other downside, and this is a big one, is that it has a lot more debt than any of the other carriers. It had entered the pandemic in the worst state relative to United and Delta, and we saw that they had issued a bunch of shares, a whopping 54% more shares between the start of the pandemic and now, and they still have $29 billion of net debt. And because of the size of its debt load, if anything goes wrong, they will most likely have to dilute shares even further. So this is one that I'm a little bit more cautious about. Now, the second name on the list is Delta. Arguably, they were the strongest out of the big three prior to the pandemic, and arguably has the most upside on paper. What do I mean by that? They are trading at about $43 and change now, out of a possible $60 to $62 prior to the pandemic. So there's actually about a 40% upside there. And bear in mind, there's very little dilution to this name. There's only about $18 billion worth of net debt, and it has the most upside if the reopening play actually sticks around this time. Delta is the domestic carrier that is most indexed to business travel. So they have the most upside if the return to office plans actually stick around this time, which I think there's a good chance that it will, thanks to the waning incidence of Delta. Now, the downside is we haven't seen that just yet. Business travel is still impacted. It's about 55 to 60% of 2019 levels. But they've already shown a pretty neat ability to attract that business spend back. For all this talk that business travel is going the way of the dinosaur, how Zoom and WebEx and other video conferencing systems are going to replace them is hogwash, because even in the midst of the Delta variant raging, Delta, no pun intended, was already able to recoup more than half of its business spend. Despite only having half of that spend, they only guided down 30 to 35% of revenue and capacity decreases, which means that domestic leisure travel is very much alive and well. Now, the downside with Delta is that they're going to have a little bit higher CapEx spend needs. They do have some upgrades in parts of their fleets, as you can see by their fleet matrix, but relative to American, where they have a bunch of A321neos, Delta will have some more work to do. But it's good that they're starting from a position of strength in terms of the balance sheet, and they're able to most likely negotiate favorable prices with other aircraft manufacturers now as opposed to prior to the pandemic. So I view this as a relatively good thing. So relative to the big three carriers, here's what I think about Delta. Are they performing well now? No. Not compared to American, and to a lesser extent compared to United. In terms of the capacity reductions, in terms of the revenue decreases relative to 2019 levels. But I do think that they have the ability to bring that forward by the most, thanks to resumption of business travel and the declining incidence of Delta. And I think that they will be the biggest beneficiary by the spring of 2022. And the stock has the largest margin of safety relative to its pre-COVID valuations. So for that reason, I have the largest position, the bulk of my airline holdings within the stock, or about 6 figures or so. The next one we'll talk about is United. United is a really well-run airline along with Delta. They expect capacity and revenue to be down about 25 to 30%, so a little bit better operationally than Delta right now. And I think the biggest reason for that is whereas Delta was very much indexed to business travel, United is more so indexed to international. And international tourism has done a little bit better than business travel, generally speaking. They also have the second largest upside pre-pandemic after Delta, about a 30 to 35% increase from here, accounting for the dilution that they had done earlier this year in the last. Another nice thing about this airline is that they're the largest net beneficiary within the cargo business. It was relatively small prior to the pandemic, but it has grown to be one of the largest cargo carriers in America. In terms of further upside, I also see a lot of potential for United to take off because of their international exposure. As Delta incidence eases overseas, especially across Asia, then we should see more international travel, and United should obviously benefit from this. Now, there are some downsides, namely they have more debt than Delta and they have a history of doing more share dilution. It's certainly better than the situation at American Airlines, but they still have about $21 billion of net debt, or about $3 billion more than Delta. And there's actually a little bit less upside in United compared to Delta in terms of the margin of safety. So that makes me a little bit more wary, a little bit more cautious. And the final thing is I think they've made some questionable decisions, like placing orders for supersonic aircraft in the middle of the pandemic. You have to wonder if some of that could have been pushed back towards 2022 or 2023. So I don't know, but I still remain relatively bullish. I view this as a secondary, more diversification play in addition to my main play in Delta. So I have my second highest concentration of shares here. All right, the last major airline I'm going to talk about is Southwest. Southwest, as you know, is America's favorite low-cost carrier. They had one of the strongest balance sheets, stronger than Delta going into the pandemic. Not surprisingly, there's give and a take here, right? So they also have consequently the lowest upside and the lowest expected bump from Delta's weakening. And it makes sense, right? If you look at the TSA numbers and where they are, travel and leisure spend has largely recovered back to pre-pandemic levels. It's really business and international where you're going to get that additional juice from. So for that reason, if we look at the market cap, there's only about a 10% upside versus pre-pandemic highs. And while I don't dislike Southwest, at this point, I'd much rather wait for rates to increase to, let's say, 2%, 225 basis points, than look at some companies on the growth side that have gotten hit and go bargain hunting there. But if I'm going to buy cyclicals now, I'm going to demand a higher return than 10%. So for that reason, I'm not going to be buying any Southwest shares. And other carriers such as JetBlue, Alaska, Hawaiian have mostly recovered as well, thanks to that tilt towards travel and leisure. So for those reasons, I'm avoiding all of those other airlines. If we turn over to the multiples, I'm comparing American against Delta, United, Southwest, JetBlue, and Alaska. against their 2022, 2023, and 2024 expected EPS multiples. And we'll see right off the bat that American, they're more expensive than Delta and United on 2023 EPS by at least a turn, and way more expensive on next year 2022 EPS. Delta is the cheapest on a 2022 basis by far, and it looks to be roughly in line with United in the outer years, and these two, Delta and United, are clearly the cheapest out of the pack. United is not nearly as cheap as Delta on 2022 levels, but it's off to becoming the second cheapest in 2023 and beyond. And Southwest just consistently trades at a premium, no surprise there. The other two, Alaska and JetBlue, really aren't any cheaper. They're certainly trading at a premium relative to United and Delta, which I put money in, so I really don't feel too bad about leaving those two out. Finally, I want to talk about one other play that I'm very bullish on, and that is Boeing. No, they're not an airline, but it's one of the best entry points in margins of safety that I've seen. It trades at a significant discount to Airbus, as I've compared in this graph. It's less directly dependent on fuel costs than the major airlines, especially as I mentioned, oil breaking $80 per barrel, potentially even going to 100 or higher. So it's great that it's not so exposed to that commodity. And yes, the downside is that they might lose a substantial part of the China business due to geopolitical friction and ties to the US defense industry, but does it warrant trading at such a large discount to Airbus? My opinion and history has shown probably not. So for that reason, it's my third largest hold after Delta and United. Now, the last sector I'll touch on, just because it's been getting a lot of attention, I hear people say, yo, tenbagger, tell me about cruise lines. Are you putting money into Carnival? Are you putting money into Royal Caribbean? And the answer is no. See, as I mentioned in the dilution video, it might look misleading to think that there is 50%, 100% upside, right? That Carnival can double, more than double, compared to the share price that I was trading at prior to the pandemic. But the thing you have to remember is that these cruise lines diluted so much stock that Carnival literally has close to twice the number of shares on its balance sheet than it did starting the pandemic. So that the illusion that you still had twice the distance to get back to pre-pandemic highs is really just an illusion. In reality, cruise lines are already captured about 85 to 90% of the value that they had prior to the pandemic. So from that standpoint, it's almost like they're trading more like a Southwest in terms of margin of safety than a Delta or United. Not to mention, they still have mountains of debt and dilution, and it's just a much less compelling play for me personally than some of the airlines. So I hope that was helpful. Again, these are just my opinions. You should do your homework, and feel free to ask questions in the comments. I'm happy to get back to you as soon as I can. But I hope that was helpful. And as always, thanks so much for tuning in. Nothing is more valuable than your time, except for maybe your money. And I hope to catch you on the next one. Peace out.